What is going on, YouTube? Welcome to the Living Free channel. My name is Tyler Freed, and in today's video, I'm going to be talking about something that is keeping us poor. Us as truck drivers, us as Americans. I wrote it on here. This keeps us poor. And why am I making this video? Well, because I got a comment on a recent video I did. This was probably a couple months ago. I posted this video, but it was where I was talking about me expanding my trucking fleet and the goals I have set for my trucking business and what I want to accomplish with it. And just recently somebody commented saying, the trucking business is way too risky. Why put your money in something like that when you could put your money in a CD or put your money in a treasury bond or something that's much more low risk. So I'm going to get into that in this video, how that mentality, that mindset of not being willing or being afraid to take risks is actually holding you back. So if you're new to the channel, I appreciate you for being here, and I would appreciate it if you would like the video, sub to the channel, stay tuned till the very end of the video, because look, if you're looking at getting into the trucking industry, or you're already in it, you want to start a business potentially in the trucking industry, this is a great video for you. Even if you don't want to start a business in the trucking industry, it's a great video for you as well, because I'm going to get into just risk taking in general, whether it be starting a business yourself or investing in another business. Moral of the story, I'm going to be just going over what is absolutely vital, and it's a necessity for you to do in order to escape poverty, even escape the middle class, and get into the top 10% and maybe even the top 1%. So like I said, I'm going to get right into it. So that's what sparked it, though, is somebody pretty much saying, why take that much risk? Why not put your savings in a safe investment? Well, here's why. Okay, so I'm going to erase this. And the problem when you take too low of risk, okay, is number one, inflation. Okay, inflation. So you could put your money in a savings account, and right now yields are up because interest rates have been up. But you can probably get on a money market account right now 3.5 to 4.5% right now. Same with a treasury bond. That's about what you're going to get on your money. Well, inflation averages 3 to 4% per year. So if you put your money in a T-bill, right, or a money market, you're pretty much going to match inflation. So what I always tell people to do is, because I do believe you should have your finances in a secure place, and then, though, after you are secure, it's time to not be secure. It's time to go for actually building wealth. I do believe in laying a foundation. There's some people that'll say, hey, just as soon as you get working, start investing. And I'm not saying that's the worst thing to do, but you need to set yourself up, lay a foundation in your financial life so that you don't, have to dig yourself into a deeper hole. Let me give you an example. Okay. So inflation's number one. That's the problem with T-bills and money market accounts, though. Real low risk investment. Not a bad place to park money, but that's not going to make you rich. Putting money into those type of things. That's more like short-term money, and it's just something to pay you a little bit of interest. But you want to get your money into something that is going to more than outpace inflation. But first thing I always tell people, get out of debt. Why get out of debt? Okay, so we're going to talk about the security first. And once, if you do these steps, you're not going to need to worry about the risk, the volatility of your investments that I'm going to get into. Getting out of debt, what does that do? That frees up cash flow. Wealthy people understand that cash flow is the name of the game. It's really not even net worth. It's how much income do my assets produce? Or how much income, how much money do I have from my job to be able to save and invest into assets that pay me passive income and go up in value over time? It's hard to do that when you're deeply in debt. Most Americans are deeply in debt. So I always tell them, get out of debt. 2 6-month emergency fund. Okay. That is 6 months worth of living expenses in something like a high yield savings account or money market account, something liquid, right? That's not volatile like investing in stocks or real estate or your own business. And I know I started this video talking about how somebody said, well, you're taking too big of a risk starting your own business. I'm going to get into that. Don't worry. So, but this is the first two things I would tell people to do before they save up to start a business, before they invest into stocks, before they invest into real estate, anything that's more aggressive than the things that the guy was saying. This is what you want to do, because when you're out of debt, your expenses are low. Hopefully you're doing very well. You're making 80, 90, 100 plus thousand a year at your job. A lot of people that watch me are in trucking, and if they listen to me about finding your niche in trucking and doing what others don't want to do, they should be making more than above average what the normal truck driver makes. They can get into the six-figure mark if they do a lot of the things that I talk about. But getting out of debt frees up cash flow, right? When you eliminate that debt, you eliminate payments, and without any payments, you have a lot lower living expenses. And when you make a lot of money, that means you can save and invest a lot of money, and that's how you build wealth. Now, what you invest in is, up to you, right? It's going to depend on the risk you want to take. Like I said, I'm going to get into starting your own business and everything, the different investments. But then the 6-month emergency fund. Why do I tell people to build that up before they start investing? Because when you get out of debt, you want to stay out of debt. You do not want to have to use a credit card and go back into debt to cover those unforeseen expenses. You also don't want to start investing right after you get out of debt, because you don't want to have to cash out some of your investment money to pay off whatever emergency you may have. So build up a sizable cushion. And for most people, that's somewhere between $10,000 and $20,000 in cash. And when I say cash, cash or cash equivalent, whether it's just in a checking account, get as high of a yield as possible in your savings. Not saying don't try to get a high yield on your savings. You should try to do that. But that's still not going to make you rich. All this is doing is laying the foundation. It's keeping you out of debt and keeping you from cashing out your investments once you start to cover those expenses. So those are the first two things. Third thing, though, and this is where we get into, now it's time to take a lot more risk than just buying T-bills and putting your money in a money market or high yield savings account. Invest. Okay? Investing. If you do not learn, okay, if you do not learn how to make money with your money, you will work forever. You're never going to escape the rat race. You will always be dependent on a job for your income. You'll never be able to retire. You're never going to have any real freedom in your life. What investing does is, yes, you have to work for your money to be able to invest. But if you're wise with your money and you invest it properly, you will outpace inflation with that money. You will more than outpace inflation with that money. And eventually, those investments will grow to the point where it will replace your income from your job. Okay? So, what are some things you can invest in? One, stocks. Okay? And stocks could be individual stocks, mutual, like actively managed mutual funds, low cost index funds, which I recommend to everybody. Two, real estate. Three, crypto. Four, commodities. So commodities would be like gold, silver, oil, things like that. And then five, business. your own business or somebody else's business. You could be an investor in another business that's already started. Maybe you have, $100,000 and you know somebody who's running a company that could use investor capital, and you want to make a play, and you think, hey man, I could turn my 100 into, 2-3 million. This, whatever. But business, I'm going to go through the different levels of risk with all of these, but what I will say with all of these things, I would say in the long run, you're better off putting your money in these things, one of these things, or a combination of them, than putting your money in like a money market or whatever, because most of this stuff, is going to outpace inflation. That's the biggest thing. We are losing our purchasing power due to inflation. Every time the government prints money, which they will continue to do no matter who's in office, they're going to keep printing money and devaluing our currency over time. And what happens when you have your money in assets like stocks, real estate, crypto, or your own business, is as the government devalues the currency, the cost of everything goes up. If you're a business owner and you raise your prices when the cost of production goes up, you actually pass that inflation cost on to the consumer, is what you do. And if you're a stockholder in a company or an owner of a private company that's raising those prices, that's actually going to make you richer. Inflation makes you rich. Same with real estate. When government prints money and the prices of real estate go up because of inflation, if you own real estate, your real estate price, your the appreciation on your property is going to go up. And you can raise rents over time as well. So, moral of the story is get your money out of cash and into assets that produce cash flow and go up in value over time. I know a couple of these things that I put don't produce cash flow, but they can go up in value over time. I'm just going to explain what I believe to be the risks in all of these. But moral of the story, someone told me, hey, why are you starting a business? Why? Well, because my business, can make 25% plus a year, where inflation's doing 4% a year. My business can make 25, 50% a year, you know? And in some businesses, it could be exponential, depending on what type of business you have. But the first thing, stocks, okay? And a lot of people are scared of the stock market because they don't understand it. But just put it simply, a stock is just a share or a piece of a company. Or, if you own an index, right? Like say you buy an S&P 500 index fund, you own a piece, a share of the largest 500 companies that are publicly traded on the New York Stock Exchange. They're all US based companies. If I buy a world diversified index fund, a total world stock market index, I own a small piece, if I buy a share of that, of all the publicly traded companies in the world. So what does that mean? Okay, well, you are a business owner. When you own stocks, you are a business owner. You are buying into the most profitable, most valuable, biggest, brightest, and best companies in the world, especially if you invest in a low cost index fund like I recommend. I recommend the book, The Simple Path to Wealth by J.L. Collins. If you want to know more about index funds, I'm not going to dive too deep into it in this video. But if you're not going to buy single stocks and build your own portfolio out, that's absolutely the simplest and statistically the best way to achieving success over long periods of time. So you get out of debt, you have an emergency fund, and you put a large percentage, 25+% of your income, into a low cost index fund that buys the total US stock market or S&P or total world stock market index. You pick one of those, one or two of those, and you invest a large percentage of your income, dollar cost average, consistently into those funds over time, and you will become very wealthy. You will retire. You will not just retire, but you will become a multimillionaire. You may even retire early. But get your money, and well, why do I say, get your money into those index funds? Because again, you become a business owner. You buy ownership in the biggest, brightest, and best companies of the world, like Apple, Google, Facebook, Nvidia, Walmart, Home Depot, household names. And those companies, what do? They produce real products and services that we use each and every single day. Our economy would not function without those things. And that's what you want to do. You want to own things that produce something of value. And as long as those companies are cash flow positive, meaning they make more money than they dole out in expenses, as long as they are profitable and they're growing their revenues, their top line, and growing their profits and expanding their company over time, you will make money. It's that simple. The more money a business makes, and over time, the value of that business goes up. So why an index fund? Well, when you own an index fund, you're not putting all your money in one thing, one stock, one company, because you can go the route, again, of building your own portfolio. That's where I would say that's very, very risky to do that. Now, some people like to do that. I tell people who ask me about single stocks and all that, I say do that with like 20% of your portfolio. Put 80% into a sound conservative investment like an index fund, and then maybe take 20%. And if you want to try to buy your own stocks, do that, build your own portfolio that way. That way you're not putting all your money into high risk investments, because I would consider single stocks to be high risk. Not saying you can't make money and do very well. You can, but over the long run, over a 10-year span, 95% of active money managers don't outperform the index. Over like 30 years, 1% outperform the index. And that's how you get people like Warren Buffett, who, is an anomaly. He's like the one guy that did it, and he's world famous. Who beat the index, and he's world famous for a reason, because it's near impossible to do what he's done, and you're not going to do that. Somebody watch, if you're a truck driver driving 11 to 14 hours a day, you're not going to outperform the S&P over a 30-year span. You're not going to do it. So put the majority of your money in a low-cost index fund, and then if you want to buy single stocks and mess around with that, do it with a smaller percentage of your overall net worth. But when you buy a single stock, it's the same thing. Okay. Like I said, you own a piece of whatever company. If you buy the single stock, you're putting all your money into one company. If you buy one share of that company, you are technically a part owner of that company. If that company does very well, and 10x's in stock price and overall valuation, you benefit from that. It's just, moral of the story though, get your money out of cash and become a business owner. You can become a business owner by buying public companies, or become a business owner by buying a private company. A private company is just a company that isn't listed on a stock exchange. You can't go online and buy its share, or buy a share of that company. You have to invest privately in that business. It's that simple. And usually when you do that, you have a lot more control over that investment, and more inside, more of an inside scoop on what's going on. That's the risk with stocks like public companies. Yes, you can read about that company and do all the fundamental analysis you want to on that public company, but you don't really know what's going on the day-to-day operations like you do running your own business. So that's why I like diversity in when I invest in the stock market. I like that diversity. I like owning every industry. Every industry. I like owning every market too, not just the United States and not just the largest 500 companies. I like owning the total U.S. market and international markets as well. So, but that just depends on what you want to do with that. I think if you buy a broad market index, though, you'll do just fine, because what has the S&P 500 done? 10 to 12% per year. Okay. 10 to 12% per year annually. Inflation's like 4%. Okay. And now, not in recent years, but over the last like 30 years, inflation's been roughly 3 to 4%. So let's say you're getting that 10%, your real net return is 6%, real in real, dollars above inflation. And if it does 12, you're doing even better, right? You're doing 8% above inflation. That's the point, is you want to, whereas again, the T-bill is paying 3.5%, 4%. That's pretty much matching inflation, but you put your money into businesses that not only do they go up with inflation, because what happens again when inflation happens, businesses pass the added cost on to the consumer. We pay for the inflation, the consumer does. These companies don't pay for that. They pass it on to you eventually. And eventually what happens is inflation gets priced into the stock market. And then you've got growth and dividends and stuff. That's where that 10 to 12% comes from, is the inflation. And then you've got, the growth rate of the company growing, how much they're making every year, plus dividends. And that's how you get that 10 to 12% a year. Yes, stocks in the short run go up and down and up and down, and they're much more volatile. Businesses are much more volatile than like owning a treasury bill. But over a 10, 15, 20, 30-year span, they're going to businesses are going to crush pretty much every other asset class. And that's just not just me saying that, that's a statistical fact. Okay, so that's stocks. You could put your money in that. I always recommend index funds. Now, real estate's the second thing you can do. You can buy and hold real estate. You can flip real estate. There's different types of real estate: residential, commercial, multifamily, single family. That's something you want to get educated about, but a lot of people want to do that. There's truck drivers I know that want to save up money for a down payment, buy their first rental property, or buy a property, live in it for a while, then rent it out when they have enough money for a second property, and build a long-term real estate portfolio. That's something. Read books on that. One of the best books about that is the ABCs to Real Estate Investing by Ken McElroy. That's a great book. Check that out if you're into learning about real estate investing. Then you've got things like crypto. Now, remember I said I like putting my money in things that produce cash flow and go up in value. Crypto does not do that. Crypto, you can buy it and it can go up in value, but there's no production. That's what I don't like about crypto, but some people like that. But I don't like it. There's no service being produced. There's no real product being sold. You can't really do a fundamental analysis on it. It's more of a speculation. Not saying you can't make money, but it's more of a speculative thing. And I would say crypto is kind of like single stocks for me. Sorry, my alarm went off. But where I left off was crypto is more like single stocks for me, whereas it's something I would not put 100% of my money into. There's people that are going to do that, but I believe you're taking too big of a risk doing that. And so if you're going to invest in single stocks, or add some crypto, or I put commodities on here too. I'll just like gold, silver, oil, things like that. Again, now oil is, it's a real product. Gold is a real product. But if you're buying it as an investment, it's, again, there's really no fundamental analysis to it, right? You can't project its worth into the future like you can with a business. A business, you can do that. Even with single stocks, really, you can do a fundamental analysis on a business. But with commodities and crypto, not saying to not hold them. I've had people say, well, I like to own some gold and silver. Again, if you're putting 10% of your net worth, or 15, 20%, I'd say anything over 20% though into gold, silver, crypto, single stocks, you're taking too big of a risk, because one, you don't know what's going to happen with things like crypto. You never know. I do believe like Bitcoin and Ethereum, the big ones, they're here to stay. But commodities like gold, silver, there's a lot of boom and bust cycles with gold and silver. And really, over the last 40 years, if you just bought the S&P 500, you absolutely crushed gold and silver. Again, that's because businesses will always outperform commodities. They're always going to. Not saying it's bad to hold some gold and silver. I get the thesis behind owning some of that. I even get owning some crypto. I even get that. But again, I wouldn't make it part of your overall portfolio, a small percentage of your net worth, where if something goes wrong with that, you're not totally screwed, and the majority of your money is invested in a sound, solid investment. And then the last thing, though, to end this video is business. So again, it's been kind of long-winded to get to this point, but somebody told me that starting my own business is too risky, right? Okay. And this is why I always say stay tuned till the very end. All right, and I'm erasing this because you'll see. All right. So, starting your own business, the only way you do that is if you know, one, you have for sure customers to sell your product or service to. I own a trucking business. Okay? As long as I own trucks and trailers, okay? Now I have a power only fleet. Just trucks only. But as long as you have trucks or trucks and trailers, you pretty much have a trucking business, because there is always more freight than trucks available to haul. Now, is it always a lot more freight, high freight volumes? No, that's how rates fluctuate. But there is always a need for trucking. That's why I started a trucking business, because I wanted to start a business in something that I know that this country, society always needs it, no matter what, whether we're in a recession, we're in a boom time, doesn't matter. It's always needed. It's a necessity business. I like necessity businesses. I love rental real estate. Why? Because if you do buy and hold rental real estate, guess what? Everybody needs a place to live, and not everybody can afford to buy their own home. That's where rental real estate comes in. Okay? And as long as I do trucking right, okay, I run a low cost of operation, as long as I do my due diligence on the industry, I don't want to spend a lot of time on it. As long as I do my due diligence on that business and I know the ins and outs of it, and I, don't take too big of a risk within the business, and I do what I'm supposed to do, I will have success over the long run. Could I fail? Could I fail? Absolutely, I could fail. But this, I wrote on the board, the thing that's keeping you poor is being afraid. And I said stay tuned till the end. Afraid to do what? Fail. I'm going to end the video with this. What's holding Americans back? I don't care if you're a truck driver or not watching this video. What's holding you back is you're afraid to fail. Could I fail? Could I lose all my money in trucking? Yes. I know that. Could you lose money in stocks, real estate, treasury bills, all of the things, crypto? Yeah. But if you're afraid to fail, you're never going to be successful at anything. So I talked a lot about finances and, stocks and none of that matters. It all starts with, are you this? Are you afraid? If you are afraid to put your money into something that could make you rich, and you're so scared that you just never do it, never try it, you're never going to become rich. You're never going to be successful at anything, ever, financially, or just anything. Some people are afraid that are watching me, that have watched me for a long time. They're afraid to get their CDL. They're afraid to leave their comfort zone and they know, like, they're probably making 30 grand a year. They're afraid to leave their little bubble and go from 30 to 70 and potentially six figures and do all the things financially that I talk about, but they're scared. To end the video, if you want freedom, and this is really it right here. If you want freedom, it ain't free. It ain't free. Freedom comes with a cost. Okay? Freedom comes with a cost. It comes with lots of hard work, sacrifice, a great plan, and just persistence, discipline, and not being afraid to fail. So, am I afraid to lose my money in trucking or in index funds? No, because I know there's a risk that that could happen. But if it does, in the end, does it even really matter anyway? Because we're all not going to make it out of this life alive anyway. So why be afraid to take risks? Why be afraid to attempt to attain freedom while you're here? That's my video for today. That's my thoughts on starting your own business, investing. Don't be afraid to take risks. God bless. Thank you for watching, and peace out.